All right. We're about to get started. Speaker, thank you. You're part of this story, man. It's all good. How y'all doing? Good afternoon, good morning. Good to see you guys. We are live. Is everyone on Zoom hear us? I think my computer is a sneaker thing. Yeah, they need to see the crowd. All right, everybody on Zoom hear us? Can we get like a thumbs up? There we go. Thank you. All right, guys, welcome to our third annual home buying event with UIU-LA. Very grateful to be here with these amazing panelists and everybody here. It's super exciting. Very, very fortunate to be in this position. And we want to share this knowledge with you all to help you guys with your home buying experiences and your home buying journeys. So we are here as a team. We'll introduce ourselves shortly. But this is just really just to give back. Number one, the knowledge. Number two, the expertise. And number three, just to make sure you guys have the right tools needed to make sure you guys are successful when this time comes. I know some of you are homeowners, some of you are prospective homeowners, some of you are renters. It's okay. We're all in different steps of this journey, but we're here as a team to guide you through that. So really excited for this and looking forward to this amazing event. So thank you guys. Next one. Perfect. So just like a disclaimer, obviously this is informational, so take it with your how you want to take it, but we have no liability with what you do with this information, but we do want to help you guys out, just to let you guys know. Next. All right, panelists, my name is David. I'm the real estate agent here, and we'll just kind of go this way and you guys can hear from the panelists here.
Oh, okay. Hi everyone, my name is Mark. I'm a mortgage lender with Loan Factory. I'm going to be talking about some loan programs to get you into your first home sale.
Hi everyone, my name is Ifediba. I'm with Century 21 as a realtor, and I'm going to be talking about the closing process.
Hello everyone, my name is Seth Ochoa. I'm with New Beginnings Inspections. I'm going to try to make this a little interesting today. This is kind of a lot of people don't know about home inspections, but we try to make this interesting and hopefully we can show you guys some good insights.
My name's Brandon Roach. I'm with Monarch Title. I'm going to be going over title insurance. What is title insurance? Why do you guys need it? And during that home buying process, why is it so crucial to you guys to have it?
Can we give a round of applause for our panelists, please? So for the icebreaker, you just have, excuse me, my voice. We just have some questions for you guys to just get started. So first question is, what's one financial myth or fear you guys have heard about buying a home that you'd like to better understand? So this opens to anybody here, both in person and on Zoom. So please feel free to unmute your mics or raise your hand. Go ahead.
I've heard it's cheaper to rent than buying a home. That's what I've heard before.
Okay, good. You think that's true? Yeah. Anybody else have any myths they want to share? How about any fears? You guys have any fears? Okay.
Yeah, cool. So what's one thing about the home buying process that feels confusing or intimidating?
Go ahead.
I would say the fact that investors come in, buy up all the homes. The people that have never bought a home, they are competing with the people that have multiple homes or even like this crazy long portfolio.
Do you feel like that's intimidating to you?
I don't think it's intimidating to me. I think if I look in my head, I'm thinking in my head I feel like it's a bit unfair because I believe that everyone should have a home before the investors that are buying up everything, leaving it open. That's my mindset. It's like everyone should be placed in a home, and then the investors maybe come in after. But obviously, this is America.
Yeah. Anybody else want to share anything else? Yes, I do.
Underwriting.
question for you. Anybody want to go real quick? No? You can on Zoom? All right, last question is, what's one money habit you're working on to prepare for buying a home? What do you guys get into?
I save it for a down payment.
That's smart. That's smart. Our finance guy right here.
I was like, nah, not gonna start with this.
Not gonna start with this, okay. Andy, I think that's all right.
Yeah, I was gonna say the documentation, like my bank statement,
Getting those correct. Yeah.
making sure that I don't use my debit card in bad ways.
Got it. Okay. Anybody else like to go? I don't know if there's anybody on Zoom. No?
Getting my credit score up.
There we go. Nice. That's a very important aspect of this whole journey. Okay. I think we're good. Next one. Thank you guys all for sharing. Appreciate you guys. All right, so this is today's agenda. So first is buying a home with me and my brother. Next, excuse me, is getting pre-approved with Mark. Then home inspections with Seth, and then my dad, who will come in shortly to talk about investing and how that kind of looks like. Then we have Brandon for title insurance, and then the closing process ended off with me and my brother again. So you guys have a full day here. We also have some testimonials, some demos, and some other things going on. So jumping into that, about me, you guys' host here. I recently got my master's in school psychology last year. I've also been a real estate agent for the past 4 years now. April 9th, mark my 4th year officially. Working with Real Brokers Technologies, been with Power Real Estate Group for 4 years. Have over 5 years in experience in property management, leasing, buying, selling, not just in SoCal. I've done deals in Texas, and then I did it in Florida, nearing close to 10 million sales volume, so very happy about that, and 3.2 last year alone. So we're getting there, My brother and I have done Airbnb here in this house actually, and we've been co-hosts for 2 years, and then currently working on my license as a broker. So my goal is to have a team around me. Currently have in the back, all these lights and everything is my team handling all this. So shout out to Delisa and to Brandon for working the Zoom here. So we're all getting there slowly but surely. So I'm very grateful to be here. Next, Ifani, go ahead.
Yeah, hi everyone. My name is Ifediba. I've been with Century 21 since 2023. I currently work at Accenture as well, doing management consulting. I was nominated for Rookie of the Year for like strong sales and stuff like that. I recently closed my first home in January for 1.15 and helped the buyer save $50K. I've been supporting, I've been on my Airbnb Superhost, so did that for 2 years with my brother as well. I really love helping first-time home buyers, particularly like underserved community, like Black women particularly, and helping buy their first homes. I'm pursuing an MBA. I'll be pursuing an MBA this fall at a top 15 business school. Still choosing what, but I want to pivot into real estate, private equity specifically, and background. Yeah, so I'd love to combine content creation and comedy alongside real estate and seeing how that goes.
Thank you. Next slide, please. All right, so we're going to jump into buying versus renting. I know some of us are in the midst of both. Can I get a raise of hands to see who's renting right now? Okay. All right, and then who has bought their home? Okay. Cool. So just the advantages like between both, as those who may know or may not know. So we're buying, you own the property, you have like the equity there, that's an asset to you. For buying as well, the monthly cost is pretty consistent with the mortgage with a fixed rate. Flexibility, you have more control over the property. With renting, obviously you don't own the property, you're subject to your landlord, and if rent increases, there's less flexibility between like making changes. You have a security deposit due, and that's usually first and last month's rent. For buying, as we know with the tax benefits, you can basically write off a lot of things there, mortgage interest, property taxes, and then you're also susceptible to market inflections. So if there's a down market, there's an up market, you will gain equity accordingly. Renting, as mentioned, is pretty stable. Again, neither is bad. Everybody's in their own little, journey. But the goal is just to make sure that you understand the differences between both. Is there any questions? Okay. Next slide.
Yeah, so 3 reasons to work with a realtor. First, you get professional expertise and guidance. You get access to the MLS, which is an exclusive system. In addition, we handle the paperwork, the contracts, and negotiations. We try to make it as easy as possible, so you just focus on savings and the specific house that you want. Next slide, please.
All right, so to know if you're ready to buy, just make sure you have these 4 things checked off. First one is proof of steady income. So, having a steady, like a pretty stable job, W-2, having that going for you, low to medium debt. The debt includes student loans, personal loans, all that stuff. Then cash for down payment and closings. Obviously, you can also have it in like a 403B, and you can also withdraw from there as well. And then the last thing is usually 2 years with the same company or the same industry, but Mark will explain more because there are some ways to like get around that as well. So you don't have to meet those exact criteria. But I think the next slide is him, so he's gonna be the man for you guys. See you in a moment. Take it away, Mark.
Testing. Alright. Hello everyone, my name is Mark, NMLS number 1893898, and I am the numbers guy in the whole real estate transaction, right? Before I jump into some of the mortgage content I want to share with you guys, I'm going to take a step back and tell you a little bit about myself. I joined the mortgage industry in 2020. Since then, I've helped renters become homeowners buy a bigger house, empty nesters downsize to something smaller because their kids left. But within that time, I've gained like a wealth of knowledge and I've used it for my own self. And I was fortunate enough to become a homeowner in 2022. So that's my condo there on the right. So everything I'm going to be telling you today is stuff that I've actually done myself and try to make the process as smooth as possible. Later this year, I'm hoping to become an investor in 2025, either rent out my unit or sell my condo and try to upscale and buy another place. So, in the world of real estate, there's a lot of options. So I'm here to kind of share with you those. Can I get the next slide? So, my name is Mark. I'm a mortgage broker with Loan Factory. What that means is that I work with a ton of banks, but the reason I chose Loan Factory is because the owner and CEO of Loan Factory, he was the top mortgage broker in the country in 2021 and 2022, closing over 5,000 loans within that time period. I do 1 loan a month and I'm going crazy, so I was baffled by the fact that he was able to scale to that huge number. So when I talked to him, I met him in a mortgage conference out in Detroit, and he kind of showed me his systems. And since I joined Loan Factory, my business has actually scaled along with it. So, which is, I'm super happy to be with Loan Factory. And the nice thing, can you hit the next slide for me? Loan Factory is a broker. So what that means is that I can talk to over 200 different banks that works with us. So prior to joining Loan Factory, I worked for one bank. So I had one bank, one set of interest rates, one set of programs. This is what I can offer you. And if that doesn't fit your square, then I'm sorry, I can't help you. Now with Loan Factory, I have a plethora of options to work with. I have all these different banks. So whether we're doing a first-time home buyer, we're finding investors, we have hard money deals, different programs that kind of fit my clientele and the niches and how they either receive their money or, when you listen to them and kind of figure out their financial situation, there's always a program that can kind of put them in the right box to help them get pre-approved. So these are just some of the banks that I work with. I have good relationships with them. My job as a mortgage broker now is that I have to learn everyone's guidelines and kind of fit my clientele with the right banks and then fight all the underwriters, making sure that they accept our loans. So my job is to make sure that you guys get approved and we get the best interest rate and the best terms that we're looking for. The next slide. Half my days I'm just researching banks and calling them, hey, can we do this deal? I get the scenario first and then I blast it out to all my banks and then I'm calling them, my investors, asking them, hey, this is the scenario, can you get me this, can you get me that? And then we're just kind of going back and forth. But how do we get pre-approved? So there's 3 major factors when you're qualifying for a loan or getting financed. We have to run your credit, your income, and your assets. These are the 3 major aspects that you need to check off prior to buying a home. And they're all equally as important. Yeah. Your credit is probably super important when it comes to your interest rate, because the higher the credit you have, the more favorable terms and interest rate you'll be able to get offered.
Okay.
So when we get pre-approved, I will do a hard credit inquiry to review your credit scores. We have investors that go as low as 500, but obviously the higher it is, the better terms we're going to be able to get, the more options we'll be able to have.
Right here.
Ideally, I like my clientele to have like a 740, but we can, it's super flexible. Welcome to the party. So credit is super important, right? And I do work with a couple of credit specialists that if my clientele needs are at 600, but the program only offers to 620, there's ways to review and analyze your credit report and help you boost you to the score that you need. So if credit is an issue, there's ways to get around that and help you boost that. Right? The second important factor that we have to go over is your income. Investors like to see at least 2 years work employment. It doesn't have to be in the same position, but within the same field. They like to see that your income is consistent and it's going to be ongoing. So W-2s are very easy to qualify as well. If you have 2 years employment with your W-2, that's very easy to come and get in and calculate and give you right back. But I work with a lot of entrepreneurs and self-employed business owners that they have their 1099s and their tax returns. So I'm also doing all those calculations. So it really depends on like the clientele. And of course, your pay stubs, I will review that to make sure that your income is coming in and steady, is the same every month. And the nice thing about pre-approving for a mortgage is that we use your gross income. So everything before taxes. So which is, generally helps us qualify for a larger loan amount, which is great. The last thing that I check for are your assets. So this is like your bank statements or your 401k or your IRA, anything that shows proof of funds. Because this is going to show that you have enough money for the down payment and closing costs. And once we get the perfect storm and we get all credit, income, and assets, I'm able to issue your pre-approval letter. Your pre-approval letter is it's like a stamp showing that you're ready to purchase your home. It shows you that you're a serious buyer, and it helps your buyer agent and the listing agent show that you're ready to go and you mean business. So when they see that, you see that you're pre-approved, they know that loan is going to close. So it makes your offer a little bit more enticing for them. So these are the three major factors. And there are different certain programs that if you have 2 of the 3, or you have good income and good assets, but your credit is not well, then because I have so many investors that I work with, there's some banks that allow me to work lost my train of thought. Income, assets, yeah, if you have 2 of the 3, there's always a program to kind of bridge the gap. And one of the ones I'm going to be talking about today is down payment assistance program. So if you have great income, you have great income, you have good credit, and you're just saving money right now to purchase a home, there are down payment assistance programs to help bridge the gap and get you to the home ownership a little bit earlier. And I'll go over that in just a second. So since this is a first-time home buying seminar, I'm going to go over the 2 most popular loan options for first-time home buyers. They are your FHA loans and your VA loans. FHA is this stands for your Federal Housing Administration. This lets you get into a home for a minimum of 3.5% down payment. There is MI, which is your mortgage insurance, which is for the life of the loan. You do get a little bit better rates than conventional, and it's designed for lower income credit borrowers and lower credit borrowers. So these are only if you're buying a primary home, you're a first-time home buyer, and the loan limits kind of differ by county. But the nice thing about FHA is that you can have low credit, maybe as low as 500, and then the minimum down payment of 3.5%. That's the minimum investment you have to buy this property, which is pretty low. So from the bank, or the investor side, we're financing the 96.5% of the rest of the home. So it's a good way to get your foot in the door. And an even better option is if you serve, thank you for your service, we have VA loan options. This one you can get into a home with 0% down. Depending on the VA benefits that the VA gives to you, you're entitled to, the VA loans is the best option because there's no mortgage insurance for that, and it's a 0% down payment. So if anyone's served in any branch of the military, they have like really good loan options when it comes to purchasing a home and even investing afterwards. Okay. So there are a lot of down payment assistance programs. Like I said, these programs are designed if you already have a good income, you already have good credit, but you're just short on funds. You don't have the 3.5% to put for your down payment yet. So that's when I would recommend down payment assistance. Or you have only 3.5%, but there are closing costs that you have to pay. Then I would offer down payment assistance as well. And down payment assistance is great because it helps you get into the home a little faster. It helps you with closing costs, and you can keep a little bit of money in your pockets. So I want to introduce you to one of the programs that I offer, Zero Flex. This program is great for first-time home buyers because you can come in with a 0% down payment, and the investor is going to cover the 3.5% for you, which is super nice because now you can save. If the home was $550,000, you're saving $19,250 in your pocket that you don't have to pay at closing. But the investor, the way the program works is that they give you the money up front, and the down payment assistance comes in the back end. It comes in as a silent second mortgage, meaning that you don't have to make any payments towards it. There's a 0% interest, but it's locked in with your mortgage as a second mortgage that you don't have to repay for the first 10 years. After the first 10 years, that down payment assistance is forgiven. So unless you refinance the property or you sell your property, you don't have to pay back that down payment assistance at all. So that's why this program is pretty popular right now. Zero Flex, all you have to come in with your closing costs, and the down payment is completely covered.
What if you do sell the property?
If you do sell the property, then you have to pay back on the equity or the sale, the net profit of it. Yeah. So it helps if you find your forever home, you just want to get in the door and you're going to live here. You're not going to sell the property. Then this program is going to work perfect for you. There are different other down payment assistance programs, just kind of depending on your needs. Some of them offer as high as like $100,000 or 20% of the property, but there are income limits and depending on what cities you're moving into. So I always like to talk to my clients, kind of see what's going on, where they want to move, what type of property they want to live into, whether it's a single family home, a condo, a duplex, or a fourplex. Getting all that information kind of helps me tailor what type of loan was going to fit best for them.
And that doesn't impact the actual mortgage of the property, the interest rate isn't higher?
No, yeah. So for this particular program, it's a silent second mortgage. So you're just going to be making your first mortgage payment, whatever you qualify for that. And the second one has a 0% interest, no payments. And it's eventually forgiven if you stay in the property. Yeah.
Past 10 years.
10 years. No, yeah. So this product in particular, you have to stay in the property for 10 years. There are other programs that you can stay in there for 6 months and it's forgiven, but they only offer maybe 2% or 2.5 or something like that. So there are some programs that you put in, you invest 1% and the other 2 is assisted, and then just kind of depending on your needs. Yeah.
So, oh, sorry, go ahead.
Go ahead, you can finish what
No, go ahead. Your hand was up.
Are you sure?
Go ahead.
I was just asking, if you sell the house before the 10 years, do you pay back the exact amount, or is it based off how much you sell the house?
Yeah, so this program, great question by the way. Yeah, this program you're allowed to borrow up to 3.5%, but if you only borrow 1%, that's how much you're gonna have to pay back. Whatever you borrowed is what you would have to pay back when you sell the property, which would essentially you're not really losing money out of pocket because you're selling the property and it's coming from the net proceeds from that. So it's really nothing out of your pocket at that point. Yeah.
So I know with FHA loans, like you have to live in the property for at least 1 year. And if you want to rent it out afterwards, you can. With this, you have to live in the property for 10 years, or can you rent it out after a certain period of time?
Yeah, it's another great question. This program in particular is for primary residences. So if you do move out or you refinance or you sell it, then it would trigger the repayments, or you have to pay back in full.
So you can rent it out? Do they need to know? Do you have to tell them?
Hey, don't tell me.
Don't tell Mark. Don't tell Mark.
Good tell them.
They have to know.
That we never said.
Yeah, you really. Yeah, it just really depends on how you're structuring like your next loan. So if you want to rent out your FHA home and you want to buy another one, it depends if that going to be your new primary or you're going to be renting out this one. Because then the way you structure the file and the loan is a little bit different. But yeah, we can do that. Yeah. Yep. So yeah, just to recap on down payment assistance programs, just depending on your needs and how much down payment assistance you're actually looking for. There are different programs out there that are forgivable. Some of them are repayable as a second mortgage. So there's another program where if you qualify for like a 5% interest rate, your second mortgage is going to be 1 point higher. So you'll be paying back the assistance with the 6% interest rate for that example. But I have about 44 different investors that offer down payment assistance programs. This is just one of them. But
Sorry, last question.
yes.
So I know it says, you said 0% interest if you pay it back home.
Sure.
But what about the mortgage insurance? What percent of that, like how much is that per month
For this program?
for the down payment? Yeah, the second mortgage piece.
The second mortgage piece? Yeah, so the actual second mortgage, it has low mortgage insurance. So it kind of falls along the lines of your first mortgage, your FHA. So when you're paying for the home, it covers that.
Okay.
Because yeah, your mortgage insurance covers the lender from if the borrower defaults. And then you have your home insurance that covers the home if that anything happens to it. So the mortgage insurance is what covers the lender if the buyer stops paying mortgage or defaults or foreclosures, something like that. Then we don't lose our money. But it's from either government-backed loans, so it helps in that case. Does that answer your question? Okay, sweet. Can I get the next slide? Okay, so lastly, I know I can go on and on, but we have a panel, and I know it's a Saturday, it's a beautiful Saturday today, so I want to wrap this up as best I can. The last thing I want to share with you guys is that I know there's a lot of great lenders out there and a lot of different programs and a lot of other banks that can offer you stuff. All I ask is that I do have this promotion where I believe that with Loan Factory, I have the best programs out there and I can get you the lowest rate. And I have this promotion where it's a best rate guarantee. So if you already have a lender, which is great, you have a good relationship, I don't mind at all. But if you give me the opportunity to match their rates or in fact even beat it, I'd love to help close your loan for you. If not, just for the opportunity, you come to me and my loan is not as good as theirs, I'll give you an additional $1,000 on top of that.
Hey, wow. Can we come for that, please? I like money.
Yeah, that's how confident I am that Loan Factory has like the lowest rates guaranteed across the board. So all the first-time home buyers and VA loans, I'm pretty sure that within one of the 200 banks that I have, that I usually win the deals between them. So that's one of the big programs right now that I'm promoting that bringing me a lot of business right now. And if you guys want to hear more from me or just want to follow me on social media, that's my QR code. But other than that, I appreciate your time.
Round of applause for Mark, please. Next slide.
There's a question.
Oh, that's, or is that it? I think that was him asking a question. Okay, so next step, I hope you guys enjoyed that part, is so you're approved, and then you start to submit offers, and then we begin our inspections. We have somebody who's here just for that. But just to know what the next step is, after that is the seller who wants an earnest money deposit. So that's typically 1 to 3% of the home price. That is refundable to you. So we have different contingencies that are in place for you to basically protect your deposit and to get like your money back. Offers can only be accepted, countered, or declined. So just know that most of the time they're declined. I'm sorry. Most of the time they're countered. It wasn't declined. We want you guys to get accepted, but they want to tighten up the terms. make sure that things are good, and really make sure that they have what they want, because it's a back and forth. And yeah, once accepted, the home inspection begins. Appraisal and loan is ordered simultaneously. Except we'll go into the home inspection shortly, but the appraisal is about, depending on the size of the home, about $400 to $700. And then the loan, that's where Mark comes in, and he'll let you guys know about his points as well. Next slide, please. Briefly about escrow. So escrow is a third party. They're in charge of all the documents, all the signatures, all the signings in the process of buying a home. So the typical length of the escrow is about 30 days. It can be shorter, it can be 14, it can be 7, it can be 5, whatever it takes. But escrow is there to make sure that everybody has their documents in a row, all the funding is good, and we are all good to go as we continue forward. They want to protect you. So there's a lot of things like wiring scams that may happen. So they send you wiring instructions when you open escrow, and from there you send it to them, and they secure your earnest money deposit. Next slide. After that, you also have vesting. So vesting is dependent on your relationship status. So if you're single, you say David Ifediba, a single man. If you're married, you say you and your spouse, a married couple. That shows ownership and title, which where Brandon comes in. But essentially, it's just to show who has ownership in the home. These go to the county tax reporting, and then that is put into the system to show who has possession of the home. So this is actually public information too, if you're curious. The main thing that we want to get to is when we see, and when Mark comes in, is the we funded email. That means that your loan is cleared, it's gone through all the rows of like underwriting, it's passed all those levels, and you are good to go. And you're pretty much at like the closing line. And then we record it, meaning that it's recorded in the county and that the house is now in your fun fact actually is that when you do buy your home, the bank holds the deed. You don't get the deed until you finish paying off the loan entirely. So 30 years, typically, and then it's mailed to you actually. So that's a pretty fun thing. But yeah, then you're closed, then the house is yours. But we have Seth here to kind of take it away and tell us more about home inspections. Can you give her a applause, please?
Alrighty, my name is Seth Achar. I'm with New Beginnings Inspection. I've been doing inspections for 7 years now. This is the fun part though, when I get to talk to people and they're like, man, you look like you're 20 years old. And I'm like, well, I started when I was like 20, so I'm kind of telling my age now, so. But yeah, I've had this business for 3 years. It has been super, super awesome. I've got to meet so many cool people. Of course, it's different when you're not owning the business, and then when you start your own business, and then you start rubbing elbows and shoulders with all these people that got all this money, and they're like, oh shoot, and you start trying to learn how to run the game. So, but today I want to tell you guys about home inspections. I think we can skip to the next one. Okay, yeah, we can go to the next one right after that. Okay, so what type of inspections do we provide? So single family, which is going to be the most common. Multi-family, so we're talking like duplexes, triplexes, quads, you name it. Condos, which is kind of what I'm going to be doing in a little while. I got a condo I got to go inspect in a bit. Manufactured homes, I get that question all the time. Do you inspect manufactured homes? Yes, I do. They're pretty much just like single family residence homes. You gotta crawl into the house, gotta get on the roof. They just don't have attics for the most part. I mean, I've never seen one, so unless they kind of spook, just kind of spook one on me, I don't know. But and then commercial buildings, which are kind of my favorite. Commercial buildings are fun to inspect because they're kind of easy, but there's other things to look at. We can go to the next one too. I'm kind of getting to some of the little details here. Okay, you're putting money into something that is a big deal. So when you go into a home, if you're not going to get the home inspection, like I have a friend, I don't want to hold you guys too long. He skipped the home inspection because he thought the home was, okay. He skipped it without knowing any kind of knowledge about the home. He had just got married. He was about less than a year in, and his pipes bursted. And it flooded the entire house. He had to move out, had to go live with his mom, him and his wife. I felt bad for him. I wouldn't live with my mom if I was married, But, so there he was back with his parents again because he decided to skip the home inspection. And he could have found that out if he would have actually got his home properly inspected. So we can go to the next one. And then we'll kind of get into some story time here for you guys. Okay, so this seems to be my most popular story I always seem to tell. So reason why you shouldn't wait it. So I think, I hope you guys can all see this, but the middle picture right here where you see the little circle around there, I actually just saw that before I came here. So it's called a double tap breaker. So the reason why that's so important, the story I always tend to tell is I met an agent a couple of years back. Before she started using us, thank God, but she told us about a story that she got into escrow with this client. They closed, they thought everything was well, they did the home inspection, right? She gets a phone call from the client, and like I think she said it was at night. And the client is just straight chewing around. And she's just kind of like, you got me into this home. The electricity on this whole other side of the house is completely went out. It's your fault. And so the agent's like, bro, I don't do inspections. I'm just an agent. Like, I just sell homes. Like, I don't know nothing about electrical, roofing, all that. So they have a home inspection done, right? Like another guy come in. They open the panel, and that's what they saw, which is what is called a double tap breaker. And double tap breakers tend to short breakers wherever that's designated to. So that, let's say if that's designated to the kitchen. Or let's say that particular area that she was talking about, it's going to short that breaker, cause too much pressure on the breaker, which can cause the electrical to short and cut out. So, but the main thing I really want to hit on is if they would address that during the home inspection, that would have never happened. So instead of her calling her agent's freaking out because she don't know what she's talking about, she doesn't know anything about electrical, and now she's dealing with cut power. So super, super important to get your home inspected to catch things like that. We can go to the next one. I got a couple more stories for you guys.
Well, I do have a quick question.
Yeah.
Why would an electrician or whoever put that in the house in the first place if that's what they did?
So it's malpractice pretty much. So it's basically just guys coming in if you're not doing the actual job right. So you get, but sometimes you get guys like, for example, like, and I'm gonna speak in my industry for you for a second. Sometimes you get guys that are home inspectors, but they're not really thoroughly trained, and so they just, hey, we've kind of had them on ride-alongs a couple times, we're gonna send them out. Now, if they're not like well versed in that, they don't know many things on the whole process of the home inspections and what to look for, they're gonna miss things like that. So, or sometimes there's guys that are just like rushing, you know, they're just trying to get the home done, and they're just boom, boom, take their pictures and they're out of it. But also too, how thorough your report is. I mean, there's some guys that are just kind of just throwing the pictures in. I'm super anal, I guess you could say, about being thorough about my reports. I'm super serious about that kind of stuff. So you'll see arrows pointing to everything, circles pointing to everything. Like, I just want you guys to know what we're talking about.
I will vouch for that because he does it. That's reports that are about 130 pages average.
So, but sometimes there's some general pictures, but you'll see off with just like an inspection report or so. So to kind of keep going from there. So I don't even know when. Can we go back to the? Could we go? Oh, sorry. So I don't know why that picture came in like that, but sorry about that, guys. But the middle picture though. So this is a story I tend to tell in this one too. So I was at this property. I'm like walking around. Right, it's a duplex. And so, if you ever start seeing me kind of double take on something, like I'm, hold on, like, I'm kind of going around and I keep coming back, like probably something's wrong. So I'm looking at this and I'm like, bro, something is not right here. So I'm like, okay, well, there's like gaps here, like, okay. And then I just see the rocks on the side. So I talk to my agent, I say, hey, like, have they done any work to the house or whatever? And so they're like, yeah. They said they just did renovations, like some stuff in the foundation. And so I was like, okay, all right. So I go to crawl into the house, which is this bar picture right here. But I'm looking and I'm like, bro, like this house is being held up on the rocks. So I get out and I go talk to the agent. I say, hey, like, and by the way, guys, when you go and purchase your home, you're gonna read the listing and they say, oh, freshly renovated, or it's gonna say, oh, like just done. They're always gonna tell you that. Like, you know what I mean? Like, they're always going to tell you those things until you actually get the home inspection. You're like, okay, they didn't do a good job. But anyways, so I'm under there and I'm seeing that. So right, so I go talk to the agent. I say, hey, like, you said they did work on the house? And she's like, yeah. And I was like, like the house is like, there's a lot of gaps and being held up on rocks. And she's like, yeah, they said they just did, they just had the foundation reinforced. And I was like, by rocks. And I was like, okay. So then, you know, so at that point, I'm like, okay, this is kind of crazy work. So I'm telling them, like, hey, listen, like, I'm never going to tell you, hey, don't buy the home, right? You know, because some people come in with money to be able to fix anything, whatever. But your house being held up on rocks is a whole different ballgame. So they ended up backing out of escrow. The house stayed on the market for the longest time. I don't know if somebody, I'm sure somebody purchased it by now. But, you know, us coming in and telling them that, right, it saved them a lot of money because foundation is going to be one of the biggest things that you guys are going to have to fork out money for just in case there actually is a defect or some damages, things like that. We can keep going on that one too. Okay, so plan for future expenses. So all three of these appliances, so your water heater, the furnace, and the AC. So I remember at these particular inspections, they all worked. They were all perfectly fine. Maybe just some age, things like that, some little defects. But the thing is that not everybody comes in with the money to spend, you know, give or take $2 to $5 grand or so on appliances. So I always tell you guys, since they did work, and a lot of times, I mean, I've worked heaters from the 1960s, and it's kind of crazy that they worked. But we try to inform you guys that, hey, you know what, you want to have an HVAC guy come in and do maintenance. You want to have your water heater drained once a year. I don't know if you guys have ever seen, like on TikTok or like Instagram or YouTube shorts, when somebody drains a water heater from not draining it, it's like a bunch of brown, nasty stuff that comes out. It's just from lack of maintenance. So we try to tell you guys, hey, you know what? These particular appliances are older than their projected lifespan. Put some money aside, right? You want to try to inform you guys on things like that. We can keep going from there. I think we can pull out, yeah, here we go. So the inspection report, so people tend to ask me what goes into inspection? What are we inspecting? So the crawl space, which is where I get under there and I find, you know, the crazy stuff. So you guys ever follow me on Instagram, I tend to post some of the crazy stuff. I think David would probably, you know, test it out, but I've posted dead animals, I've posted leaks, foundation, just jacked up stuff. So the roof, the attic, the garage, you know, the pool, the spas, the bathroom. So we're gonna give you a full report on everything. So, and it'll be thorough. It's gonna have section by section. So kitchen, bathrooms, it'll all have its own section. Yes.
When it comes to stuff that's like behind the wall, so the electrical, the plumbing, how are you testing that?
So I can't get like behind the wall, right? So that's when we want to have somebody else come in, right?
Mm-hmm.
Now, usually we can kind of find some of those things. So for example, if your outlet is not grounded, we have a tester for that. So if it's not, it's going to tell me. And then you usually want to have somebody come in because they're going to have to open that up, put some ground wiring in there because that goes into the earth as well. So, and then within your walls. So there's going to be stuff like that. But if you ever have to get in the walls, you're going to have like somebody come in and kind of open that up for you.
So in the event, like, for the example that you gave earlier with your friend who bought the property where the plumbing issue,
yeah.
like how would you have warned him, okay, you might have plumbing issues in the future?
So the area you lived in has a crawl space. So that's when I crawl under, right? But whenever I crawl under a house, I run all the water appliances. So kitchen, everything that's in there, dishwasher, the sink, bathroom, the bathroom sink, the shower. I flush the toilet one more time before I go under there. Like I'm running everything that has water. And that's when I can usually find a leak. So then, but he was so done. I was like, man, how did you not do that, you know? So, but whatever. You know? We can go to the next one. And that's like a PDF version of it. I like the digital one a lot better because I put videos on the report. You know, there's the pictures, you name it, the arrows, everything's pointing to it. And we come fully equipped. So we have moisture meters, thermal imaging guns, the drones, gas leak detectors. So we have everything for it just to make sure that we can give you guys a thorough inspection. And then we can skip, we can skip the next one because I think that one's not, shouldn't even be on. Okay. So you can skip to the last one, I'm sorry. And then one more after that, the testimonials. I don't really want to bore you guys with the testimonials, but
He's a 5-star inspector, just
but yes, that's how you contact us. I always say follow me on Instagram because that's where you guys can see. I'm a pretty transparent kind of guy. I'm gonna show you guys everything that we do. I always say on the Instagram, and I'm always gonna post something for you guys to see. So, are there any questions I can answer for you guys? Anything you guys are curious about?
So Seth has, oh, sorry.
I have a question.
Yeah.
So, parents found, I think this was pretty funny, when they were renovating the ceiling in one of the rooms, that apparently it had just been, it hadn't been filled in properly with all of the necessary, like, yes, so they just all pulled in like pieces of wood that had been nailed at different angles to kind of hold up the fan. It was pretty funny, I took a picture of it. I'm wondering if that, like, but because that was in the ceiling, is that something that a home inspection would catch?
Well, because we do get in the attic. So, I mean, if we are able to see what we can, like as far as in there, unless it's like all black on insulation, right? But I mean, I wouldn't know unless I was there, right? Because sometimes the insulation's out there, I can see, like visibly see. Because I've heard people just falling straight through an attic, so I mean, you can literally see right there if you wanted to. So whatever is visible for us to see, that's what we'll make sure we notate for this.
Okay.
But you get, I'm sorry?
I'm sorry, but if it's in something that's not visible, so if it was like in, like it's a two-story house, it was in like the ceiling of the first.
Okay, now that's a little bit different. You just want to have a contractor for that one, so, because I try not to, I would say try not to, but you'll never see me pop open somebody's wall. So that'd be kind of crazy work to just pop open somebody's wall and then be like, hey, yeah, go ahead and fix it, so. But, yeah, but sometimes you can usually tell by even what you're looking at, right? Like for example, the home I was just at right before I came here, I was walking the areas and the floor was like dipping down. And so when I brought out of the house, they took like pieces of like shims and they like put them, they just like placed them in like around the walls. You can literally see them, they're like sticking out like this. Like, it is kind of crazy. So, and the clients were also kind of wondering, it's like, hey, like, why does my floor keep dipping every time I walk in? And I was like, well, you know. And I showed them the pictures and they're like, oh, okay. So, but those are things that you take a look at, right? So you always want to make sure you're taking a look at literally everything here when you're inspecting homes. So, unless you're rushing, I guess, but you try not to ever do something like that. But, okay, well.
Can we give a round of applause for Seth, please? So Seth has an inspection at 2:30. So what we're going to do real quick is just to take a picture of all the panelists with him, just to respect his time, because he's a busy man. Stand up real quick. Please get us information, guys. Yeah, we'll face the crowd. Just real quick. We're just to get it out the way for him.
I feel bad about that, man.
Yeah, that's okay.
All right.
Let me probably for 1, 2.
All right, 1, 2, 3. One more. Oh, yes. Ready? 1, 2, 3. One more. Got it.
Awesome. Thank you, guys. Seth, we appreciate you. Thank you so much. Another round of applause, please. Okay, next slide. All right, so we're going to discuss home buying contingencies. So this is how we protect your earnest money deposit during the escrow process. So what is a contingency? It's a clause in a contract that allows you as a buyer to back out if you no longer want to purchase your home. So be it, first one that typically goes is inspection, then it's the appraisal, and then it's the loan. So the inspection is when Seth comes in. Seth sees your house, he's like, yo, bro, your buyer can't get this house. The foundation is cracked, the basement is flooding, the wires are all messed up. You can say, oh, okay, I put $5,000 for my EMD. It's secured because I have this contingency still up, and so I can back out and get my money back. So that's the first kind of like wall you have for yourself. The next one is the appraisal. An appraisal comes in, that's again purchased the first day or so of like escrow. They come in, they see the house, they say, okay, the house is worth $700,000, but let's say you're under contract for $650,000. If you're under contract for $650,000, you have the difference of $50K in equity instantly when you buy the home. So that's a good thing for you, meaning that you walk into the house positively. However, in the case of where you're when you're in contract for $650,000, but appraised for $600,000, you're owing $50K, meaning that either A, the seller has to reduce the price for you, or you guys have to come up with that difference of that $50K. So that's to help you guys out to make sure that the banks, because banks don't like to lend money where they're going to lose money. that's the point of them having that contingency in place. The last one is the loan. Again, that's where Mark comes in. You already get receipts. That's where Mark comes in. He makes sure that things are good. You guys can close. If it looks smooth, then you can say, okay, waive this contingency. We're all good to go on my end. This loan will fund with no worries at all. Okay? Any questions? Yes.
Can like a seller do a home inspection first before like the buyer does it?
Yes, they can. So that's a great question. Sellers can do home inspections. They can even provide you that report. So it's actually to your advantage. And I have the case where if they have that inspection provided for you, it saves you as a buyer money going into the escrow because you can just use their report. If it's not too old, I'll say like no more than like a month, which is pretty okay. But yeah, you save about $500 just off of that alone.
Is there a timeline restriction on how long your earnest money is like held for?
I would say, as far as I know, not to my knowledge, as long as you have the contingencies in place. So, I mean, escrows can be hundreds of days, a year, you know, it just depends on like the kind of deal. But if you have your contingency in place, then you should be okay. Yeah, good questions. Anybody else? Yes, ma'am.
Should you be wary of using the seller's inspector if they are working closely or maybe they work out?
That is a good question. I would say yes to a certain point, but if you feel most confident, then go with your own as backup. So still set aside that $500 for your own inspection to have that. Okay. We good? Next slide. All right. So to introduce the investor here, obviously me and my brother have been a big part of this real estate journey, and we want to introduce our dad, Paul Ifediba, into the picture. So please round of applause. So just a little bit of a background. You guys see him just chilling in this chair, but he's a big man. He's a big man. So he's a licensed contractor, real estate developer, investor, and landlord. Over 30 years of experience, and he's just spearheaded different construction projects, both here and abroad. And we have been very fortunate to see it firsthand, his experiences, his success, and really grown attached to his business and to see and copy his example. So he's here. He's a wise man, and he's wanting to give you guys as much knowledge as possible. So he didn't want me to ask him any questions. So this is more so of like a free for all here. So yeah, I know he has some things to say, and I want to give him the microphone. Another round of applause, please.
Thank you, David, for your generous introduction. I believe you produced a loan.
Oh,
did you? I need to do that. 4 hours, please.
Okay.
And my friends are here. Vika is here. And Jerome is here. To do an introduction, I'll be great. That's my wife, my beautiful wife. Very strong. Well, my first advice is make sure you choose your spouse carefully. Everything starts and ends almost with it. So she has kept everything in place. That's why I'm here. So let me look at it. So David always kind of share what I do with real estate. I closed my first real estate deal in February of 1995. That was 30 years ago. And I didn't have the permission of my wife to pay me that. We have several other properties, but one of them that we share this. I pass it around. It shows you the current balance on the property, one of my 4 flexes. Because I want to keep it real, so that whatever you are hearing is something that will really benefit you. It's not get rich quick. It's long time. This escrow was closed February 25, 1995. Most of you were not born then. The balance on the loan, I believe, is 129.
1561, I think it is, May 1st.
That's the mortgage right now. The balance on the loan, not the mortgage. 129. 129. The value, you can see the value on the zero.
Yeah, it's valued at $1,324,000.
Yeah. So what's the idea of bringing this as an example? That if you persevere if you follow the way it's done, real estate will always pay you a long time. I retired as a teacher. I was a teacher for 30 years. I did this part-time. I retired 8 years ago. I think Gerald's in the school should pay me about $3,000 to $4,000 a month. But this property gives me close to $10,000 a month. So make it a journey. Don't just make it like you want to buy one house somewhere. You can see the stacks of books I have here. These are the books I read. The first one, after the Bible, you can see the Bible at the bottom. The Bible is actually the first one. You have to take care of God and God will take care of you. But this was the next book I read in 1984. I was unemployed in Lagos, and I found it in a drawer, in a cabinet inside my uncle's house. And ever since, I've always owned the copy. And if you're a good friend of mine, I will send one to you. They have it, I don't know if they're ready or not. Nice book. He's one of the best coach you can have. Classic. Most of the books you read today were somehow doctored from this. So it works. And I have other ones. If I can help me with this. You have the Intelligent Investor. This one, the guy that he had Warren Buffett. This was his teacher, Graham. And then when you make the money, make sure you take care of your taxes. And for me, I'm more of an investor in a single family. I haven't sold a house in 30 years. I buy them and keep them. And if you hold them long time, they turn into millions. We have Apartment Owners Association Real Estate Seminar coming up on the 16th. LA Convention Center is free. You don't meet all the investors. You learn a lot from them. If you are interested in doing that. This is another one. When you go to the investors meeting, they show you how to leverage. You don't just buy a home and sit back. Yeah, you have equity in your home. Equity doesn't mean anything unless you use it. If you leverage your equity, then you get to this point. And among the big boys, this is the guy I listen to all the time. This is the guy I listen to most. Yeah, Ray Dalio. He's telling Trump that he doesn't know what he's doing. That the game has changed. It's moved to China already.
Yeah.
And for investors, what we're doing right now is to make sure you have mobility of capital to move. Don't stay back here and run around the shop. He's wasting his time. They spent, United States economy spent $1.8 trillion more than they earned last year alone. When Biden came in, it was 19 trillion. Trump added 7. It just went up to 36 right now. So we are spending more than we are earning. So why I'm sharing this book is for you to make it a journey. Make sure you understand what you're doing. Take the classes where necessary. Hang out with the right investors. Real estate is always, I can't tell you what is better than real estate for me. I have other investments, I have a stock, I have other things. If we have to show a slide or something, I could have done a little more. But what I'm telling you is whatever you're trying to do now is real. It works, but make sure you stay within the right crowd. Live below your means. Don't spend more than you earn. Most people talk about single family homes. I will tell you honestly, I've never owned a single family. I've never owned one. It's either duplex, triplex, fourplex, 10, 8. Because of the economy of scale. I don't know how many of you understand economics. When you leverage, it's easier when you have multiple units. When I got my fourplex, you guys know about OPM. Other people's money. Nothing wrong with that. You are providing housing but at the same time, you deserve the pay for your service. So when people live in your home, the last time I paid rent in this country was January of 1995. Since rent takes about 40% of people's income, I have kept 40% of my money for more than 30 years. You understand how it plays out? Some people try to go and catch it quickly, make money quickly. No, it doesn't work that way. If you save 40% of your income, I don't know what your income is. Let's say you make $4,000 or $5,000. Calculate 40% of that and save it for 30 years. You tell yourself what the numbers will be. That's what I do as an investor. I'm a numbers person. David is good with sales. I wasn't good with sales. I tried. And I went to the area of my strength, which is I recruited apartment buildings. They don't complain. I don't have to do any service for them. I just collect and share the money. No, we share the money with the county, the city, the bank, the insurance company. By the day, I know my target. 30 or 40% of the gross receipt is mine. And that's why I'm able to, do the few things the way I do it. So I really encourage you guys to make it a journey. The 30 years or 20 years goes quickly. When you're young, I don't know, when you're 20, 30, before you live, boom, is 60 years, 70 years. Life is short. But if you get things in place, it takes care of it. So I don't know if you guys have any question for me. Yes, please.
After you purchased your first home, how did you finance your second not your first home, but your first property? How did you finance the second one? Did you take money out of the first one as a down payment for the second, or did you just use like?
Let me give you that story. Let me back up a little bit so you get to that picture. I came into this country in 1991, educated in Nigeria, but I could only be a security guard. And while we were doing security job, we had this idea that we can make money, but we don't know how. I wanted to be a stockbroker only. I got my license the next year, but then I put on my suit and tie, I didn't make any money. So I started looking around for that. That's when I got into real estate. I started teaching. The teacher next door to me was a relative. So I told him that I needed a fourplex. But I started saving money. So I started doing 2 jobs because I failed in sales. But I knew I could put the numbers together. So I started working as a teacher during the day and security job at night. 7 years. The first 4 years, I was able to sell, I was making, it was $7 an hour as a security guard. I'm doing $4,000 a year as a teacher. But I was able to save my first $25,000. So the fourplex came in the market, and then it was issue of financing. So the agent I talked to, the teacher agent, took me to the deal. They needed 20% down, $193,000, and I came up with 25. And they told me that I'm not qualified, I should go home. And part of what I read in this book said, no, you're not going anywhere, I'm buying it. And then the question turned around, but you don't have the money, but I'm buying it. So I refused to leave. They looked around and said, okay, let's find out what to do. They checked my credit. It was good. What really made the deal work was my good credit and the money I saved. The first year I made $14,000. Second year, $19,000. Third year, $29,000. Fourth year I was in 43, but I saved $25,000. They said, how did you save this money? I said, from this record. They said, if you could save $25,000 from this income and you have this good credit, the agent gave me a loan of $19,000.
Like a personal loan?
Personal loan. 9%. I didn't know what interest was. I just took the loan. Paid him. But that's how I got into the deal. I was tenacious with my savings. I had good credit. These are things you must have. Because one thing is, some people want to do is that they want to get in cheap. At the time, can we get in like 20% down? 3%, 4%, it's okay. That gets you a house. But what percent of the house do you own? If you want to be an investor, 20 in. That's how you get in there. So, did I answer your question?
No, but now, like, so after you purchase that first.
After I purchased that's another story. Some, the tenants who were there, they ran away. So I moved in there, one of the units. Out of 4 units, 2 were occupied. I moved into one of them, stopped paying rent. My brother moved into one. And I owned it from 1995. I still own it. By 96, I refinanced that, 97, I refinanced that building. I cashed out the first $54,000 in my life at that time. And the first thing I did was, I used $4,000 out of that to go and say thank you to my dad. Bought him a car. Then, a 10-unit property was in the market. Nobody wanted it. This is where the loan guys come. I found out that from my seminars that what is called assumption of loans. Yeah. So that we made a line. If I was to pay the 30% down for $350,000, how would that be? About 100 something? Closing.
Yeah.
But because I assumed the loan, the family wanted me to pay their outstanding mortgage balance, share some money. So my $54,000 came in handy. I gave them the 40 something or 50,000, I can't remember the exact number now. And I owned the property. So from 4 units, I moved to 10. Within a period of about 8 years. And within that period of time, my equity in both properties was over $1 million. But I was still teaching. So that's part of the skills you acquire. Sometimes the skills are more valuable than anything you can imagine. You may be working so hard to save your money. Cool, nothing wrong with that. But the skills, again, can get you around certain ways of acquiring property. Then I got into the next deal. This guy was a wizard in finding properties. He found a 10-unit property. Then I refinanced the 10 units I bought, refinanced the 4 again, and put $154,000. 170. The first deal took about 120. That was it. I bought a complex with it. Then there was about 20 or 30,000 left. And the same seller told me that I have another 8 units for sale. I said, okay, I'll buy it. And we went into escrow. I showed the properties and showed the 30,000 left. But then I did 80,000 to close the escrow. So then the escrow said, bring the money. I had to pay 30,000. I went on the phone. I called the bank side. No, I need money. They said, well, what do you need money for? I said, put it in my credit card. So I called around because I had good credit. They increased my credit card. And I moved all the credit card money into cash and closed escrow for 80,000. So there's a lot you can do if you have the skill. And then your mindset is mostly conditioned by something like this. So from that point, I got to the point where I bought this property, bought another one, and decided to retire from my job. Most people when you have a job, they say, oh, you retire when you are 70 or 60. My grandpa told me way back then that don't do your job beyond 55. At 55, I put in my retirement. I retired 8 years ago. And from there, I went into property development. And we did another property. I'm a licensed contractor now, a retired teacher. Month to month, I do my maintenance, hang around my tenants, and my family. So there are a lot you can do, depending on what you want to do with it. The guy behind me, Jerome, because of him, yeah. He is the guy that takes you into retirement accounts, insurance. Some people don't know the game in the insurance business. When you have cash flow, there's a way you put it in the insurance program. You grow tax free. You take a loan on yourself and buy a property. I did a lot of that. I had the 403B, one of those other ones, you know?
401k.
401k. Then there's one I did a 7-pay. I pushed in on one of my properties when I refinanced it. I paid off, I had 300,000 on that program, and I did a 7-pay. So I dumped 200,000 into it. When I did that, and I needed to build this house, I went to that program, I took 150,000 and built that house, this house right here. And then the next property, I went to the equity line of credit, pulled the money, and did strong work. And all of them will come together. So you gotta have skills to do certain things. You gotta have people to help you do it. So we can talk from now till the end of the day. And I don't know if I have, you guys have questions?
I have one question.
Yes.
So you mentioned Apartment Owners Association has a call.
AOA, yes. On Thursday. Is it Thursday?
This Thursday.
Yeah, yes. It's on that. It's online. And AOA. Google it. It's an LA Convention Center. That's where I got most of my knowledge from. They were like my university. I have a few guys there. We used to go on road trip to Texas to see properties. You learn about the California real estate cycle. California has a real estate cycle. You have to know when it goes down, you pick it up, it goes up, you sell or you leverage. It's a lot you learn from that cycle.
We have about 2 more questions. Let's go with them.
Yes. Thank you for coming today. My question is, so you mentioned that you started with the 4-plex and you moved to 10 units, but like normally I hear people say they go from 4 unit, 3 unit, 2 unit, and a single family. So like, why did you back at that time go to more and from 4 unit to 10 unit property?
Guess I'm greedy. It's more about my background. My father was a businessman, and I grew up hanging around him. He was a palm produce dealer. Before oil came in Nigeria, there was palm produce and all that. He had lorries. We had businesses. We were shipping out of the country. So growing up, I kind of be in that circle. We used to go to AG Leventis and buy these trucks, leverage them. They call it hire purchase in Nigeria, but we call it leveraging here. So I grew up in a circle where such we do stuff. That's why that David that defined involved. I said, look, if you can't outperform your dad, then my father said, if you can't outperform your dad, you're a dwarf. So you have to outperform. And they have what it takes. So they are the springboard, is more of being able to dive and swim.
I think there's a question here. Was there a question here? No? Okay.
Yeah, what type of insurance policy did you use to grow your money tax-free? Was it like a whole life policy?
Jerome, you want to give us a version?
Yeah.
This is the man right there. He got me into the business in 1995, 96.
Wow.
And at that time, I will tell you something. When I bought that insurance, my wife was in Nigeria. I gave her a copy of my life policy. She started crying. She thought I was going to die.
Yeah, actually, Paul is not just a real estate developer, but he's my good friend, close friend. And he...
Yeah, voice is good.
Okay.
His voice.
And he liked to hang around with people who knows what is going on. He just doesn't like to hang around any kind of person. So my advice to everyone here is to hang around with people who knows what is going on. Then another thing is that index, you see, there are 3 major industries that control the economy of America, 3 of them. And real estate is one of them. Now, these three major industries, you can't go wrong. One is securities.
Stock market.
Stocks and all this, and bonds, and 401k, 403b, 501c, 529, 457, mutual fund. They have mutual fund, government bonds.
ETFs.
We have IRAs, individual retirement account, treasurer bond, municipal bond. We have annuities, different kind of annuities for old people. We have fixed annuity. We have so many. We have what we call gold. We have silver. We have coins. The one they're using to mess up the younger generation up. So now, all these things, if you don't understand them, you are in trouble. So that's why scale, like my brother says, scale is very important. So that is securities. And securities grew from 8 trillion in my face to 17 trillion. I was looking at it growing. And that's people's money. That's your money. You put it there, they take it back. And some people are trading on stock. They don't know what they're doing.
I traded what do you call it? Options.
Yeah, he traded all this because he got some experience from us.
Lost money.
Then another.
I did some shipping across the world. I lost money. But the one that got me together was real estate.
Yeah. So the other industry, the one I just said is the biggest one. And that's where people are so that you can do, there's so many rich people. They produce so many millionaires. Then on the middle one, which is banking industry, you have, even though you are not a banker, you must learn what banking is all about. Very, very important. So what bank is doing with your money. So there's another banking industry. In my face, bank grew from 4 trillion to more than 14 trillion. They tripled.
Yeah.
That's why they keep giving people loans. And my Bible is saying that a borrower is a slave to the lender. If you don't know how to borrow. Then the other industry, okay, in banking, that's where the real estate is. Real estate is so broad that you have to know what you are doing, that my brother. You have to get in, hang around with this kind of people, they show you what to do. Otherwise, you will be in trouble. Then the other industry is life insurance and health. Life insurance and health. That's another crooked industry. If you don't understand them, they mess you up again. So what they do, they give people whole life, universal life, variable universal life, and term life. Now, but there's one you can use to do whatever you want to do. There's one you can use to buy a home. There's one and it's tax-free. And they don't show people. They will never show you until you go to a financial advisor.
Yeah, true.
Financial advisor charge at $500 an hour to show you. Middle class don't have that kind of money. So when you go to schools, they show you whole life, universal life. You go to county, you see people selling it. You go online, you see them selling whole life, universal life, term life, variable life. But if you Google index universal life, you find out that average index universal life in IUL. If you Google it, you find out that average cash premium there is $10,000 a year. Average in America. $10,000 every year. Some people are putting $500,000. Some people have $500,000 cash, and they used to buy homes, develop homes, and when you take the money, tax-free. Can you imagine? So that is why we have to, like my brother said, you have to hang around with scaled industry. Real estate developer is very powerful industry.
What I call that's the biggest piggy bank.
Yeah.
Yeah, it's a piggy bank here.
You always take money there and buy a home.
If you put in money there, whatever that grows on it is free.
And you never lose money.
December time, if you want to enjoy life, you could just call them over the phone. You know what? I need 15 or 20,000 for this.
Yep. And you take the money, no.
They'll send it to you.
Yeah, right away.
And then you keep doing whatever you do.
And you still have protection for your family. You see, protect your assets. Should in case anything happens.
There's a lot more we can talk about. So,
can we give a round of applause for Jerome real quick? There is one final question in the chat, and it just said, how would you suggest paying off the first home in today's market? It seems the challenge in today's market is ownership. Amidst 0.75 to $1 million pricing, for example, or a simple one bedroom that's less than $2,000. Without it, how do you leverage these equity advantages or benefits?
Okay. How you slow down with the question? You have many facets. Yeah.
Sorry, let me read it again. How would you suggest paying off the first home in today's market? They said it seems the challenge in today's market is like owning a property. Without it, how do you leverage these equity advantages or benefits?
Okay. What I would tell you, when I was licensed, my license I just gave it up. So I have to kind of get a disclaimer that I'm not giving financial advice, because anybody can say, who have it on record when it came to your house, this is what you say. And this is legal. But my disclaimer is that I'm no longer licensed, but I can give you an idea of what I know. Over time, financial plans is customized. The question you ask, no financial planner can give you a general answer to that question. It is subject to the income of the people involved, the equity in the house, the spending power of the individual, investment risk, ability to take risk. This is coming to play. When we were licensed with this company, we used to come in with our software and enter out there and come up with something like a report. So my answer to that question is that it is a customized answer. If I have, just like I showed you that property with about 1.3 million in value, and somebody else has I have a relative, he has a property valued at about 1.5 million, but he owes about 900,000 on the loan. Then I have this other one, this one I just showed you, with 1.3 million and 129,000 on loan balance. So if you answer that question based on a general basis, you get it wrong.
Yeah.
It has to be based on the individual, case by case basis. I don't know if I answered that question.
Yeah, you did a great job.
But if you now take like what I have, like myself at my age, at that point where I'm no longer interested in trying to run around from morning till night to make money. I want to have more time. At my age, I need more time than money. Not that I'm not Elon Musk. But I know that whatever I have can afford me 3 or 4 vacations in Africa. 3 times a year or 4 times a year. I'm just fine tuning what I have to do. My wife is still working. Whenever she's ready, I say, you come on board. So it varies. My other goal is to make sure David and my kids and the rest of them are stepping in. So those are different. I've just sold a house since I've been buying them. And I don't have need to sell it. So some people have different needs. So the answer is case by case basis.
Okay. I think we'll wrap it up for now, and we'll ask you questions afterwards. But can we please give a round of applause? All right. Next slide, please. All right. We have Brandon next. He's account executive, and he will introduce himself.
All right. Well, he had a wealth of knowledge. I'm not going to even come close to that, so I'll let you guys know now. So I'm Brandon Roach. I'm an account executive for Monarch Title. I'm going to talk to you guys a little bit about title insurance, just a little bit about myself. I've been doing this for about 6 years, going on 7 years. The reason why I'm in this industry is because of my father as well. He's been in the industry for about 30 years. So I'm going to kind of go over what is title insurance. you go to the next slide. Raise of hands, does anyone know what title insurance is? No? Or somewhat, maybe you might know somewhat of it. It's the protection against any title issues on a piece of property. So anytime there's, you're purchasing a piece of property, what I always say is, the government, let's say the seller has any issues when it comes to liens, judgments, and what I mean by that is, let's say if they've judgments like child support, they attach it to the property. So if, let's say David was selling me a house, and me and him just shook hands and like, hey, I'm going to buy it with no title insurance, whatever is attached to that property is now in my name, right? So what we do in title is make sure we do a thorough title search to make sure you as the buyer is going to get a clean piece of property. A clean title is what they call it. So that's where we come in, right? And then there's also lender requirements as well. Because we need to make sure, the lender's going to need to make sure they're giving you and letting you borrow a good sum of money. They need to make sure that piece of property is free and clear on title too. So there's going to be an owner's policy, which is your policy, and there's going to be a lender's policy on title. The only way there would be no policy or lender's policy is if you paid all cash, because then there's no lender involved, right? Let's go to the next slide. I think so just some issues when it comes to title insurance. So there's undisclosed liens, so people that have unpaid mortgages, tax liens if they didn't pay their taxes, or maybe contractors if they did, some work on a piece of property but they never ended up paying those contractors, they can attach it to the home that you're looking to buy. There's a lot of fraud and forgery, sadly. So people impersonating, if David was going to sell a house, but someone's saying he's David, but it's not David. We've seen a lot of that too. So we make sure that we do a lot of due diligence on our end to make sure everything's good to go when we are going through that process. There could even be boundary disputes. Well, we've had issues where it said, okay, that, this is where my line is right here, but realistically it was a foot over, and that person had a rose bush there. But we're able to pull up that information. It's little silly stuff like that. But the main ones are the liens, the fraud. Those are the ones that we really have to worry about. Because if not, and we don't do that, then there's going to be issues in the long term where if you, like I said, if you purchase that house and you don't have title insurance because people are like, oh, well, I don't want to pay the insurance, it's really, really crucial that you guys do, because then we're able to take care of it. We're able to unravel everything. And a lot of the questions are like, well, where does the insurance take place? Is it monthly? Is it, yearly? No, it's just a one-time fee during the transaction. So, and then it covers you through the whole life of your home. So if I bought a home from David and I had title insurance, right? We went through that transaction and then all of a sudden stuff was popping up. We said as a title company, hey, it's good to go. It looks great. But let's say a year goes by and stuff's popping up from the previous owner. Well, that's where the insurance takes place. We take care of it. Because if not, and we're giving you guys basically like a clean bill of health, hey, the house is good to go, that's where the insurance comes into effect. So that's why we make sure we do our due diligence, we make sure we go up very thoroughly to make sure that you guys are getting clean title. Go ahead, next slide. And yeah, that's pretty much it for me. It's short, sweet. Yeah, if you guys have any questions about title, please let me know, or do you guys have any questions right now? It's really kind of cut and paste. It's pretty simple. You guys really probably won't hear from me during the transaction. I usually deal with the agents or the lenders. That's who I kind of communicate with. But if you guys do have pieces of property, or let's say you guys have family that has pieces of property, what I do like to offer is that I can pull a profile and I can check title for them, because there is a lot of fraud out there. So I want to make sure that there's no one else trying to, say, put themselves on the grant deed or trying to get it recorded. Because technically anyone and everyone can go to the recorder's office and put a name on a deed and get it recorded saying that this is my property. And especially with some fraudulent and kind of sad notaries, because it has to be notarized. But sometimes people get their notary license, they'll sign something off, and then you're not going to hear from them forever. They're gone, right? So we see a lot of that too. So I always like to offer that if you guys do, some of you guys might have homes, or you guys have families that have homes, just to do like a little check, right? We just always like to see that the homeowner is going to say it's on there, or if it's in a trust, it's on the trust that it's on there, just to make sure you guys are at peace of mind too. But if you guys don't have any questions for me now, maybe, or go ahead.
Yeah, so what happens if you do find something though? Give us a scenario where something happened, then you found something, then what do you guys do to fix it?
Okay, so let's say I spoke about child support. Let's say there's a federal tax lien because someone didn't pay their taxes. So when that pops up, we need to make sure that's taken care of before the transaction even closes. So that seller needs to pay that off. So, and if they don't, then there's going to be no clean title insurance and they'll never be able to close escrow. No other title company will be able to take that on. So as for you guys, protecting you guys as buyers, you guys don't have to do anything. It's usually more so the seller that has to make sure they need to take care of their title issues, as I would say. So if it's a tax lien, child support, any liens or judgments in that matter.
Even if it's sold already?
No, so that's why we do the due diligence prior to this, through the transaction. So when David says, hey, we're going to go into escrow as a seller, then we open up what's called a preliminary report, a prelim, which pulls all the information on the property. And that's going to pop up and show any liens, judgments, any issues in regarding to that. So if there is ones that, red flag, then we make sure that we take care of it. But that's where the insurance takes place. If we did say it was good, and then after, it's for the previous order, then that's when the insurance comes into place, and then we're able to take care of it. You had a question?
Yes. Is this usually going to be under contingencies when buying a home, or is that implied that it's contingent on how the title search goes for them to move forward to buying a home?
So when the contingency aspect, there's no one specific where it says title contingency, but it doesn't, necessarily no, not a title.
Really, I feel like title contingency there's no option on the contract for it. But we trust the title office to get the insurance and the clean title sorted out. So when you list the home, you have to have title and like escrow set. So title is already running the preliminary title before the house is pretty much been listed usually.
Yeah.
So he's already doing his job, making sure that it's clean, that it's your house, and there's no liens on it or nothing. And then you list it, and then the buyer will come in and close the transaction.
Yeah.
And who's usually paying for the title insurance? Is it the buyer or the seller?
So it's negotiable. I would say that it's the seller majority of the time, but there is negotiate, like anything, it's real estate, we can always negotiate stuff. But it can be negotiable. Usually if that is going to happen, the buyer will end up using for the lender's policy since they are purchasing the property. But like I said, sometimes the sellers pay for the whole thing too. But that goes into concessions and a whole other thing that's in your lane.
We just closed our deal together this Tuesday, and he was on the title for that, so the seller paid for it. It is negotiable. It's literally like a checkbox.
Yeah, and that one, for example, is just like there was so many ins and outs of ownership and who wasn't the owner and who was, but that's the stuff that you don't necessarily have to worry about. That's the back end stuff that we have to deal with on the day to day. But as long as it's clean and clear, and transactions don't close if it's not. If the title company doesn't give you the thumbs up, and if it does something come up, down the road from the previous owner, then that's where we take care of it.
Well, what if you? I'm so sorry. So what if you can't take care of it? Like, what if it's something that you're like, well, they can't afford to pay off any liens that they currently have, and so maybe the deal doesn't close in that case. Does the potential buyer get their earnest money back? Like,
well, as long as the contingencies are up, but we'll also see this shouldn't even go into escrow. Yeah, without that problem, because we're pulling it up because remember, you guys are buyers, so you guys are coming in, right? So as a listing agent, someone selling the home, they should be doing their due diligence to check with us or the title company to make sure there is no issues or those issues that can't get cleared up. Or it might take a couple of years or wherever they need to do. But yeah, that's the first thing that we have to make sure, and then we can go through that process.
Yeah, that is fellow Brandon. How you doing, Brandon? Just really briefly, if you could say this in probably a couple sentences, how exactly does child support attach to title insurance?
So it's not necessarily title insurance, it's to the house. So that's what it is. So basically this is your biggest asset, right? So guess what? The government's gonna attach anything and everything to your biggest asset because they want to get paid. Uncle Sam wants to get paid.
So are they talking about arrears sort of payments, or are they talking about like the
so if there's it'll pop up as like a judgment, like a child support judgment through the courts, and it'll be attached to the property, right?
Gotcha.
So if there's nothing that comes from that, because they want to make sure that they're getting paid out too, right? So it's like anything that you have to technically owe, like tax liens or anything like that, they are going to attach it to the property, and it'll pop up on the preliminary report, and we need to make sure that that seller takes care of all that stuff before we can get it clear to close.
Sounds good.
Any other questions for me?
It's nice I actually have questions. Usually I never ask questions.
Round of applause for Brandon. Alright, next one is Ifani for the closing process.
Hi everyone. I don't want to play this video. I'm not going to be virtual. That's so pointless, man. But I was going to be virtual, but at last minute I could come in person. Can we go to this slide? So what percentage do we think closing costs are? Percentage-wise of the house. Like kind of what do we think is like a rough estimate of like what percentage that like how much do you think closing costs are?
3 to 5.
Okay, 3 to 5. 10%. I don't know. Okay.
2%.
2%. 1. Yeah, so closing costs range from about 1 to 3% of the house. Can we go back to the slide, please? I don't remember. Yeah, it's like on the back.
One more?
Yeah, one more. Back to one more. Back to the video. Yeah. So what do they include is they include the property appraisal, they include home inspection fees, processing fees, lender fees, escrow, taxes and insurance, title insurance, credit reports, transfer taxes, document preparation fees, and attorney and notary fees. And I'm correct in which they could be covered from down payment assistance programs. So that's why it's important to work with Mark, work with your lenders, work with the best lenders in order to cover these. As there's even situations to where, let's say you find a house for $500,000, they look at the roof, they're like, oh my God, well this roof in 2 years is gonna collapse, right? We can look at that roof, we're gonna be like, okay, we want $25,000 in closing credit because this roof in 2 years, you know you're gonna have to go fix it, right? You have an amazing lender here in Mark. He was able to secure you $50,000 from the down payments assistance program, right? So, and then you're doing an FHA loan. Right, so you're not even putting any money down to move in. In addition, because you know the roof's gonna fall off in 2 years, you're gonna get $25,000 in credit. So you're literally, there's been situations. David's been a part of it. Mark's been a part of it. I've been a team part of it. People literally get paid to close on homes, and what you do with that credit, what you do with that is up to you. You know, and so this is a huge thing that people don't talk about in terms of being able to afford our homes, or when we even have the discussion of buying versus renting. People don't factor in the possibility of credit. Don't factor in about it. So I always like to say, like, come get pre-approved, go through the whole process, see if it makes sense for you and your situation right now, and from then on you can see if in the long term or the short term if it's something that you want to do.
Awesome. Round of applause for Ifani, please. Next portion, we need some volunteers. That's too far here. There we go. So we want to make it quick, but we want to do a little home buying demo. So anybody want to be the buyer? Anybody want to be the seller? If you're the buyer, you get to hold the key. If the seller, you hold the key until we close. Who want to be? Okay. You can be the buyer. You can be the seller.
Am I buying or selling?
You are selling. You are buying. So let's do this. Seller, come with me. Buyer, go with Ifani. Ifani is the buyer's agent. So Mark is working with you guys. I'm working with Brandon here. He's title. So how this usually goes is we're just gonna like role play here. So just take notes, laugh. You know, this is gonna be fun. So. Seller, just call me and say, hey David, I want to list your home. That's it.
Hey, I want to list a home.
Oh, fantastic. Where's your home located?
In El Segundo.
Okay. How much do you think that the home is worth?
1.1 million.
It's not worth 1.1
Fantastic. So I've seen the roof. So I would love to list your home. So I'm gonna have a little presentation with you. We're gonna talk about like the comparables, see how much it's really worth, and then make sure we have a pricing strategy, make sure that we can sell it. And how many days do you need? Like 30 days, 60 days, a month?
60 days.
60 days? I'll make it in 20 days. We'll do that, okay? Okay, so it's a contract, you know, we'll sign it right there. Perfect. Commission, make it 10% right there, okay? How much you think? 7%? That's totally fine. So that's 6 to me, right? Fantastic. Okay, cool. Okay, so now the home is listed. Cameron knows the key. So she's a seller. Brandon comes in. He's the title. Hey, how's the title looking on this home in Nusa Penida?
Anthony,
I don't know, man. She has a lot of child support.
No, it looks good. Everything looks clean and clear on the prelim, so yeah, we're good to move forward. And I sent it over to escrow as well.
Fantastic, fantastic. And there's usually an escrow agent here as well, and they make sure things are looking good. She sends another contract, so I send it to sign. Boom. Fine, you come in with your buyer. Go ahead. That's what Bert. Look at the house. How's it looking? Open house. 1.5 actually. 1.5.
I recently got it renovated.
She just changed the kitchen. All new appliances, clean, temperature, everything, new flooring.
How many square feet?
6,000.
6,000?
6,000? Is it a single family home or is it?
Single family.
For 1.1?
1.15. Don't pay that about it. So they're discussing to themselves how much they want to offer for the house. 1.15. It's
1.15, so 1,150,000.
Correct.
Right? We really know 6,000 square feet. We run the comps. We're like, oh no, like we saw a house sell down the street for 1.1. We saw another house 2 blocks away sell for 950. We're like, this neighborhood, we don't know if it appreciates that much. I'm thinking we go in at 1.1.
Wait, is he pre-approved? Have you spoken to your lender? I don't want to just talk to him. Where's the
Apologies. Really great statement. So this is why the importance of pre-approvals, because think of a pre-approval kind of like a housing credit card. You know your limits, you know what you can and you cannot buy. So you can't just have a random Joe off the street be like, oh, we put an offer down. They're not even gonna look at Joe unless they have the letter in hand, email, letterhead, the whole shebang. So now we go over to Mark.
So yeah, I asked him what's your credit, your income, your assets. You have good credit?
It's like 500. It's like 700.
Oh, it's such a big jump.
That was 200 points. In 10 seconds.
My numbers, my head.
Have you been working in a job for 2+ years?
Yeah, like 3 years now.
2 years now? Okay, brilliant. You have money in the bank. You have your down payment and your closing costs ready.
Yes, I do.
Yes, okay, perfect. You're pre-approved.
You guys want to ask him how much he has down payment and all that stuff?
I mean, for $1 million. Just so you know, you are pre-approved for a $1 million home, but you gotta know the mortgage payment for $1 million home is gonna be around $10K a month. So although you can afford that, are you comfortable with that mortgage payment?
Yeah, we are.
Okay, then.
Okay, so let's run this now. He's been pre-approved. Money sees it, and then you run an offer. So pretend like you're calling me.
Okay. Ooh, okay, we checked in. Mark gave us a pre-approval for 1.2 million. You're like, oh yeah, woo, big money, power. We're happy, yeah. Okay, so we're going back here. Ring.
Yeah, hello. Who's this?
Oh, this is funny.
Hi, how are you? How can I help you?
I'm good. I'm interested in your listing. Can we put an offer now?
Of course, it's for sale. Someone wants to sell quickly. I told them we'll close up in 20 days. So what are you offering?
Okay, so we did our negotiables. We ran comps. We ran things in the area. We want to go in at
1.13.
1.1.
Yeah, we're gonna go 1.1.
Okay. What are your contingencies? What are we working with here? Like how many days, escrow, cash,
Yeah, so this is important. So like the escrow period, as we talked about earlier, is like how many days it's in that kind of like middle ground account. So you can have a short escrow period of the minimum is like 10 days.
It doesn't matter if you want that.
It'll be 2 days, we could do 2 days, 3 days. So we want to close as quick as possible. It's Ethelbert's birthday coming up next week. He wants to have a good time. So we're like, okay, we're gonna do a 2-day escrow with a with appraisal in a week, like a week appraisal.
Okay. So, all right. So what I'm gonna do is I like your offer. Welcome to my seller. How's that sound to you so far? Does it sound pretty good?
I
I don't know, they might be lowballing me a little
You
bit.
think so? I think we need some more time too, right?
Yeah.
Okay, so what we're gonna do is I'm gonna send him a counter. We'll do let's do 2 weeks. 14-day escrow. We'll do 7-day inspection if you guys need that. We'll just I mean he has a loan, so let's do 14-day loan, 14-day appraisal. Just keep it simple. It goes in 2 weeks.
Okay.
So send it back to you now.
Send it back to me. We're like, okay, we love the house off rip, but we need to go and get an inspection. So we gotta, yeah.
Okay, so then at this point, Ivani's then talking to his buyer, seeing if they like the terms, and he has to agree to them. So this you.
I like the terms.
I like the terms.
Okay. You like those terms that we? Yes. Okay, cool. Then boom, we shake hands, kiss babies, sign an escrow. The house is not done yet. Cameron still holds the keys. But now during this time, Seth, I wish he was here, but Seth does his job as an inspector. He sees what's up with the house. And then from there, we have the appraisal being ordered. So let's just do this in this scenario where your offer is at, was it 1.1?
Yeah.
Okay, let's say appraisal at 1.3. So you're walking in with $200K in equity, instantaneous, just like that. And you as a seller, let's say you bought it 20 years ago for $200K. Now you're about to net 1.1 mil. So that's pretty damn good. So just so you guys know. And then at that point, then the 14 days, go by. I talk to title here, escrow's here. Just imagine this. Ring. Hey, how are we looking to close? How are things looking?
Everything's looking good to go.
Clean title?
Clean title, clean everything. Escrow has everything that they need to.
Perfect. I can call the lender if I need to. We finally call the lender, see how the loan is looking on her side. How's it looking, man?
We are clear to close.
Clear to close. Boom, bada beep. We shake hands. We pass the key off to her. Boom. 6,000 square feet, and El Segundo is yours. All good. We're all closed. Yeah, Zigbar I hope that really gets you guys like the idea of what it looks like. Obviously, there's a lot more. There's a lot of paperwork behind the scenes and all those other calls and stuff. But this is basically like the broad premise of it. But we want to give you guys that like fun example. So I hope that was great. Thank you to our volunteers. 3 hours across the camera. We're almost wrapped up. Next thing is just the testimonials. Next slide. So obviously we've all have been in business for a different amount of time for each of us, and we're very grateful to really do this. These are some of mine over the years. You see our president here. You see some people. So it's just been a journey, and I've been very, very grateful. Those who I have helped, those who I have consulted. Each transaction is very personal to me, so I take it with a really private joy as well. This was in Bakersfield for our president's house. I can speak about it shortly. I don't know how it's going to sound, but I think very well. But it's okay. Next slide. Next slide. Perfect. This is Seth. On the left is a $3 million home that he inspected, actually. The agent is works in my office, and he did that inspection. I don't know how much they paid, but probably like $1,000 because it's pretty big. And then that's him in his last truck. Next slide. Oh, and then you guys can go ahead and film this one here. So, you find it?
Yeah, this is the condo which I closed in Culver City in January. What I have to say about real estate is she wanted something immediately. She knew she wanted something in the new year, right? So we did all this in it was in 20 days. It was super quick. We went through like 15 different home tours. Grandma got involved, everyone got involved, church got involved. It was crazy. It was a whole shebang. But I say this to say, like, real estate, you meet someone and they'll close with you in 3 years, 4 years. Like the land my brother just sold, right? That's been 4 years in the making now, right? Or you meet someone if you're so privileged, it's like that. Like, I've known this person since 2014, and she just recently saw one of my reels and was like, oh, like, I'm looking to buy something. So real estate is a very, very long-term game, as my dad was saying. And whether now or maybe 10 years, 15 years, 20 years, whenever you feel comfortable in your journey, it's important to just stay consistent and stay diligent. As life is not a sprint but a marathon.
Thank you. Mark, Bernie?
Sure. So the picture on the left, I helped one of my clients cash out refinance from his property. He owned a $1.5 million in the Santa Monica area, and I was able to cash him out around $500,000 so he could buy another property. The one on the right side is it was a realtor referral. I helped this guy using the down payment assistance program that we covered 3.5% for the down payment, and then another 2% for closing costs. So essentially, he bought the home with no money out of pocket, but there is a second mortgage that he's paying back at the same time.
And then, don't mind my floating head right there. That's the land deal that me and David just closed on, was it last week? Last Tuesday. So that's what we were talking about. It was a couple of years in the making, but we got through it, and we had to do some things on title. But that's the fun stuff. Is like the difficult stuff that we see on day in day out to make us better for our future clients, and be able to help you guys in any way possible. But yeah.
And then for me, these two are my most recent. This was our president here, Emmanuel, in Bakersfield, and this was a 4 unit I closed on for my buyer. Ironically enough, I'm going to be speaking at San Diego for a conference for NSCC, Nigerian Student Coalition, and his daughter is the one that's managing the whole convention, and she didn't know that I sold him the house, so I was like, oh yeah, I'm talking about real estate. I just sold the dad, so that was pretty cool. And then, like Brandon explained, with That's the Land, he did a fantastic job with the title insurance, making sure that it was really clean, and Daisy as well, who's not here. But leave the next slide. Before we get into Q&A, I wanted to call up Emmanuel real quick. Is he here? I'm going to come to the front real quick, just ask him some questions about his home buying process. Can we get a round of applause? So thank you to our gracious UIU-LA president, not only for the space, but for the time. As a recent homeowner as well, I just have 2 questions, maybe 1 or 2, however you feel. But just like, what was your biggest fear or concern you had before buying your house, and how did you work through it together?
UIU-LA.
Great.
UIU-LA.
Great.
UIU-LA.
Great.
Before I move into that question, I do want to say thank you to David, to Brandon, Mark, Ifani, David's mom, his father who spoke earlier, for giving us this space for this event, and even for the food we're going to chop later today. Repeat the question again.
What was the biggest fear or concern you had before buying your home, and how did we work through it together?
Okay. So, during that time, honestly, I was much more motivated than afraid. Yes, there was some fear, and I would say that the biggest fear that I had at that time is just not being able to complete the process. But regardless, I stayed disciplined through it. David, most of the people don't know this, but last year, I knew that I lost 2 jobs back to back. And there was a time that I really went through some tests, even financial difficulties too. But David still believed in me. He saw that I was determined to still proceed and do the best that I could. And within the end of the year, by December, my birth month, we finally closed. So just conquering that fear.
Thank you. Round of applause, man. Looking back, what advice would you give somebody who's just starting out this home buying process?
The advice I would give is, when David starts, said it, live frugally, live below your means. Don't buy that expensive car right now if you are trying to buy a house. Don't splurge on shoes, take expensive trips. Yes, help yourself, but don't do too much to where it impacts you like that financially. Focus on your needs only for now, and then the wants can come later on.
And 2 more questions, just kind of finish it off, is what surprised you most about the home buying process, and what was your overall experience with myself and the team?
Really, what surprised me is how easy you and your team made it. I feel like, I didn't really feel like I even said in the testimony, it didn't feel like a business transaction to me. I felt David was very genuine to get me the best deal he could possibly get for me, and I could see it. And that's really what surprised me the most.
Could we give just a little bit of background about the deal, just to kind of give people some idea of what you purchased? Not that it's up to you. Okay, that's sure.
I'll give most of this private.
Okay. No worries at all. No worries. But can you give a round of applause? More to come for that. I have one more person on Zoom. I don't know if she can hear me. Andrea, are you there? I know you've been on Zoom for a long time. She was a UIU member here in LA, actually, and I was to buy a home in Houston, Texas. So we closed July of 2024. Andrea, you hear me?
Yes, can you hear me?
Oh, fantastic. Yes. How are you?
I'm good. Let me put my video on.
Okay, cool. We can see you.
You can spotlight her, right?
I don't have actually. There we go.
You can see me?
Yes. We're just waiting for your video.
Yes. Hi, everyone. How are you guys?
Good. How are you?
It's good to be at this meeting. I was at this meeting just like you guys. I was virtual, and this was in 2023.
Very first one.
And
Do you need for your camera to be on?
Yeah.
Andrea, can you turn on your camera, please, just so we can see you?
Oh, okay. I thought my camera was on. Oh my God. Okay. Let me find the camera. You know, initially. Oh, I see it. Okay. So here. Let's see here. Give me a second, y'all.
Should be a camera icon.
Yes, I saw it at the bottom, but it just like disappeared.
Just click it one more time and it should pop up.
If you click your screen, it should pop back up.
Oh, okay, yeah, I see it.
There she is.
Hey.
All right. Hi, Andrea. How are you?
I'm good. How are you guys doing?
Good. So, just real quick, just a few questions similar to what we just asked Emmanuel. Was what was the biggest fear or concern you had before buying your home, and how did we work through it together?
Yeah, how I got connected to David was I was a part of the organization and I attended this first time homebuyers. I had no idea who he was, but I knew this was information that I needed because it was just something that was just an idea in 2020. And then, I got scared during the pandemic. I was listening to the media and I was like, okay, maybe buying a home is not for me, and so I just kind of put it to the side, but I never gave up. Because I was just someone that, okay, let me get the knowledge and figure out what I need to do to get there, because I know I wanted to get there to the finish line. And I actually had a realtor at that point, and I had reached out to David because it didn't work out with that realtor, so you never know where your cards align. I just knew that, when I worked with David, I just felt like he was more, him and his team were more excited than I was. I was like, oh my goodness, they're determined. They got me on Zoom like that day. They were like, no, we need to do this Zoom. We need to talk about, what your plan is and everything. And they listened to what I was looking for. And so I really appreciated that. And so if you're in these beginning stages and you're fearful, I think the one thing to conquer fear is to get knowledge. So that's the best thing about being a part of this, because I was a part of this very thing in 2023. I intended to get information. I just wanted to know. I remember that at that time I was like, I just want to know, what are they looking for as part of the down payment? I just want to know. I think they were talking about $15,000 to $20,000. That number just stuck in my head. Okay, then I started thinking, okay, what do I need to do to get there? And then with other information, making sure I'm getting my credit score in the right place, working on my credit score, making sure that I stayed at the same job 2 to 3 years, even with the pay not being at what I wanted, because I knew that that's what lenders were looking for. They were looking for that consistency in your job. And so I wanted everything, so I was ready for the lenders at that time. So it was a process and it was a journey. It didn't happen overnight. This was something that was just an idea in 2020, and then it happened for me in 2024. And so I think, you may start with certain people, but it's good to work with people that you trust. And I really trusted David in this process, and I think that makes a difference, because when you work with people who have the right resources, who can get the job done, and then it's such an easy process. So I'm just thankful. Every time I'm in my home, I'm so humble. I'm just like, oh God, is this real? This was just an idea. This was just like something on a poster board, for years, so I'm just thankful. And one thing, you know, you asked about fear. I didn't really have like fear. I just had it's so strange. I just had this determination. Like I just knew that it was possible. Even when there were times I would feel down, I would just get back up and just be like, okay, what do the lenders need? What do I need to do to get to do better? What job do I need to take? I just never gave up. And I loved what Emmanuel said about living below your means. Like I had to humble myself. There were no trips. There's no buying a new car. There's no, spending unnecessary money. It's just focus on your needs because you have to think about the goal in mind of what you're trying to achieve. So if I talk too much, I'm sorry.
No, yeah. We were just one more question, just in the interest of time, is looking back, what surprised you the most about like the home buying process?
Oh, dealing with the lenders.
Yeah, we had a few.
I had a very difficult time with my lenders, but everybody's lenders process is different. Some people's lenders it's a really nice, sweet process. It's easy, but mine wasn't easy. But what I realized is that at the end it was gonna be nice when everything was done.
Can we give her a round of applause, please? Thank you so much, Amber. I appreciate you for waiting around for this time, and we're about to finish up this presentation shortly. Yeah, if anything, if you have any questions, or if you have any resources you can provide us, please let me know, and I'll share that. Okay?
For clarification, I wasn't the lender in that. I actually just got my text.
Hey. Okay, so any questions before we kind of wrap up? Yes.
I'm so sorry. I came here to support. I didn't have 10,000 more questions. Anyway, so I have a question for I don't know who can answer this, but let's say you already own a rental property and you want to buy another primary residence. What is the minimum down payment you have to put on that next primary residence?
If your next property, your primary, then you can do another FHA, so you can another 3.5%.
Even if you already own a property?
Correct, yeah. So this is gonna be the party residence, and so in theory, on paper, you're gonna rent it out. So we can use 75 of the projected rental income to add to your income, and then you're gonna buy your new primary residence. Yeah.
Anybody else?
Yes. I had a question. What's your name again?
Mark.
Mark, yeah. Do you have any experience with the FHA 203K standard home?
Yes, that's for rehab?
Yeah.
Right, yeah. So that works out in two ways, depending on the rehab of the home. If it's a light rehab, that's like cosmetics, where you gotta do new flooring, new drywalls. We add that loan amount on top of the loan. So we're financing the property and a little bit on top of that, so you can do rebuilds. If it's something more structural, where you gotta maybe fix the roofing or more constructional, that would be considered hard rehab. And that means you can't move into the house right away, you have to fix it. So we can finance on top of that, and then you have 6 months to finish your project before moving into the home. But yeah, those both fall along the lines of FHA for first home buyers. So it's your initial 3.5% down, that doesn't change, and then depending on what project you need to do, go ahead. Does that answer your question?
Yeah, you're good. Thanks.
All right. Anybody else? You guys probably hungry. Okay. Let's go to the next slide, and I think we'll wrap it up. But yeah, thank you, everybody. Seriously. We really want to just say thank you, from the bottom of our hearts. This is our 3rd year now doing this. Brandon and Mark been here since the beginning, funny too. And it's just been really cool to see this grow, virtually in person and everything. Really big support to UIU, my parents, my dad, my mom, our president here, Chidera was here too. You guys have meant a lot to me and to our team for this process. So really thank you guys. And we'll look to get a big picture. So, how you want to do it?
I believe the best would be outside.
Outside?
People
Let's do it outside then. And then go chop food.
Thank you, everyone.
Thank you, guys.